Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock. With news, sharply rising commodity prices are being caused by shortages that are undermining economic activity. That is inflation with stagnation. First up today, the price of copper is taking off again. Its price hit a record high at the end of last week as surging power prices threaten to curb supply at a time when the stocks are at rock bottom. The crunch will hurt China the most, as it consumes more than all other countries combined. And the price of zinc has risen a spectacular 30% in the past 10 days. This is caused by sharply rising European power prices, which are forcing smelters to shut down there. Prices are in focus this week. Today, the New Zealand CPI data will be released for the third quarter. It is expected to show prices rising north of 4% at an annual rate, maybe at 5.3% annualised in the third quarter alone. Then China will reveal its third quarter economic growth rate. Commodity prices, supply chain problems, Evergrande and Delta may all have an impact on the quarter's result. The Northern Hemisphere winter is approaching, and every country from China to the US is struggling with high energy costs that will sharply raise the cost of winter heating this year. In the US, new analysis shows that those using heating oil will pay more than 40% more than last year, those using propane gas 50% more. In China, there's been a rare public comment from Beijing on the Evergrande situation, and it was to squash fears of systemic risk. Their central bank has rebuked the company, calling it poorly managed, and wants Evergrande to step up asset disposals and resume its stalled projects. And the official said most individual financial institutions did not have highly concentrated exposures to Evergrande. But despite those soothing comments, the Chinese Communist Party's anti-corruption unit has dispatched inspectors to 25 financial institutions, including top state-owned banks, in what appears to be a crackdown prompted by the Evergrande debt crisis. And the economic implications of being left out of the global economy are worrying the Australians. Their Prime Minister looks like he's ready to adopt some sort of soft carbon target, but not because it's the right thing to do for the global climate, but because, quote, climate change is as much about the global economy as the environment, and Australia will be left behind if it does not respond, unquote. The US Treasury 10-year yield opens today down 1 basis point to be now at 1.57%, and the price of gold has slipped by $1 to be $1,767 an ounce. And oil prices are another 50 cents higher at just on $82 a barrel in the US, while the international Brent price is now just on $84.50 a barrel. And the Kiwi dollar opens today at just on 70.7 US cents. Against the Australian dollar, we're up to 95.3 Australian cents. Against the euro, we're at 61 euro cents. That means our trade-weighted index starts the week at just on 74.4 and up 130 basis points since this time last week, and now well over the top of the 72 to 74 range of the past 11 months. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.